Good morning, traders. Welcome to Trading Together. I'm Mel Gacee. Today is Wednesday, March the 25th. If you are here this morning, I just want to say thank you. If you would drop your name or your hi in the chat, this is a friendly, interactive stream. I'm going to take some trades live in front of you as long as the setup presents itself. And if you have questions or comments, I am happy to tackle those to the best of my ability. This is a place where I want to encourage other traders. This is a positive, uplifting space. I am open to all questions and comments. This is a free space, no credit card input needed. I've been trading for over 20 years. I have my Series 7. I'm licensed as a stockbroker, and this is what I do for a living. I'm a day trader. I'm a scalper. I scalp trades on the SPY mostly is my niche. This is how I make my living. So what we're going to do today is take some trades together if we get the right setup, and let's just get to know each other and ask your questions and comments, and we'll do some market analysis as well. All right, Dana Birkinshaw is here. Good morning, Dana. We have Gavilan and Craig. Hello, hello. Freaky Turkey is here. Good morning. Welcome. All right, let's take a look at what the charts, the stock market gods are giving us today. Let's take a look at that. We've got shenanigans, in my opinion. We are getting shenanigans. So let's take a look at what happened this morning. We opened up here right at the level we are currently trading at with a gap up on some news that Saudi Arabia has now decided to allow the U.S. to use, King Fahad, their air base, basically. And this has been a bit of a turn of policy for Saudi Arabia. UAE also kind of sounding like they may enter the conflict as well. So kind of interesting news, and it signaled to the market, I think, that we could be getting closer to an end of the conflict. I think that's what the signal was. At any rate, the market did jump right after the close yesterday. So at about 4:20 Eastern, we had a jump on the market, and it pretty much stayed elevated all night. And so if we zoom out here, let's take a look. I'll show you the 15-minute chart, and I'll show you kind of what we did all night and then what we did at the open. All right. Roger is here. Good morning, and have another good day, Freaky. Yes, thank you, Roger, for being so encouraging, and same to you, Freaky. I agree. Everyone click the thumbs up. Thank you, Roger. That would really help get my channel out there. I'm just trying to grow it organically. And so any little help I can get, I would appreciate. Thank you guys so much for that. Thank you, Roger, for reminding people. And Craig, you always do that as well. So appreciate you guys looking out for me. You're the best. All right. So I'm zoomed out to the 15-minute chart. And what I want to look at is, what is the overall trend, right? So here, we had this big pre-market jump. Do you guys remember that? That was on the 23rd. That was Monday after President Trump tweeted that he was going to pause strikes as the U.S. and Iran were going to come to the table and do some talking. I'm not sure how much of that has actually happened, or how much talking actually happened. Who knows? But the market loved it. And we got this nice big, this is a God candle. This is what we call a God candle. Came all the way from 643 on the SPY all the way up to 666 on the SPY. That's a 200-point candle, guys. Crazy big candle. And then what did the market do? It basically pulled back from that and got to our low yesterday. Current low. Okay, we've got other lows, but I'm talking about this little cup and saucer, cup and handle pattern, right? We have this God candle. We've got a dip down. We hit a low yesterday at 649 on the SPY, and then we climbed from there. So we climbed overnight, and now we're kind of in this same zone where we started. This is what we would call a cup and handle, potentially. That is a bullish pattern. Usually what it means is this is the cup here. We get a little handle, it comes down a bit, and then it moves up, it takes a leg up. That is the traditional cup and handle pattern. Doesn't have to play out this way. It just looks like that's what's forming here. And it's all going to rely on what we do with the 200-day moving average. And this has been the star of the show on my stream for how long now? Several days, maybe even a couple of weeks. All right. That's a cup and handle with Parkinson's. Or it's a bit of a barcoding cup and handle, isn't it? We do see some of these barcodes going on here. So yeah, I'm with you on that one. But it's all going to be predicated on what happens with the 200-day moving average. That is the big star of the show. So let's go over there and take a look at it like we do just about every day. We'll come over here to the daily, and I'll make it a little bigger for you. Isn't this interesting? The last 3 days are giving us very similar patterns, aren't they? Take a look. What's going on here? We've got doji, doji, doji. What is a doji candle? It is a candle that has wicks up, usually on both sides. It doesn't have to have a wick on both sides, but most of the time it does. What defines a doji is the small body, this right here. Okay, so remember the 4 parts to every candle: high, low, open, and close. Those are the 4 parts to every candle. The high and low are defined by this wick. This is what we call the wick of the candle. So the high is the wick up, the low is the wick down. The body represents the open and the close. Okay, on red candles, the open is at the top, the close is at the bottom. On green candles, the open is at the bottom, the close is on the top, because green candles move up, red candles move down. Okay, so what we are getting today is nothing more than another doji. Look at this, 1, 2, 3 days of dojis. And what do these dojis have in common? Well, 2 of them, these 2, were 3 of them. This is not exactly a doji, but more like a spinning top, you could call it. What we are seeing is wick up through the 200. 1, 2, 3 times we have wicked up through the 200. That is not super healthy, not super healthy. We should have seen a strong response by the bulls, pushing us back up through the 200 with no doubt that we were recovering. This leaves a lot of doubt, because what does a doji stand for? It stands for indecision. This is where the bulls and the bears meet in the middle and say, okay, truce, right? They come right here. Where this body is where bulls and bears meet. They both say, all right, fine, we will stay at this price. So you see a doji here, a doji here. So far, a doji here, but this is looking awfully weak. This is not a good look for trying to recapture the 200. And if we don't recapture the 200, we could come a lot farther down. And of course, you guys know, if you've been watching me, my big picture analysis is we are in fact going farther down. This is not the end of this drop. What I expected to see was a bit of a dead cat bounce, which we sort of got, right? We sort of got this dead cat bounce right here. Dead cat bounce is just a way of saying it's a temporary bounce that falls back down. It's a terrible word, but it's been in the markets for decades and decades. It's just a way of saying we get a bounce that fails, basically. And so that's in fact exactly what we do have, a bounce that failed, a bounce so far that's failing. However, what did today's candle accomplish from yesterday's? It accomplished a higher high, and a higher low so far. The candle has not finished forming all the way, but it has formed a higher low. All right, I'm going to move back to the 1 minute so I can see what's going on here. Looks like we're coming down. We sure are. We tried to come up and hold the VWAP here, but nope, came right down through it. So let's see what happens when we get to our current low. We have a current low right here, sitting at about 656 on the SPY. Let's see if we come down and test it. This is nothing more than shenanigans. Are we going up or down today? Well, this candle looks depressing. There is not a lot of room to, well, we don't see the bulls fighting very hard. Now, that doesn't mean we can't get a, you know, some sort of a crazy rally today, but this is not looking good. So could we be in sell mode? We could, because what's the other thing we notice about this? Do you see these lower highs all the way down? The trend line is pretty clear, isn't it? If we drew a trend line here, let me throw a drawing on here. If we threw a trend line on here, we would see, why are you doing that? I don't want that there. Right. Okay. One more time. Add a drawing. There we go. All right. Look at the top here. We could open it out more, but I'm going to call it right here. This is pretty clearly in a downtrend since we made the high, but the trend is a little wonky here. It kind of goes like this and then drops. The point is we are in a downtrend, and these lower highs are falling in line, right? So that's something we can't ignore. All right. Keeps rejecting the 10-day for the past several weeks pretty consistently. Yeah, I have, well, my 9-day isn't on this chart, but I do have a 9-day that I watch. Let me put that hidden here in just a second. There it is. See what you're talking about there, freaky turkey. Yep. The 9-day is in green. So you can see it right here. I'll highlight it. That's the 9-day. And you're exactly right, freaky. We've been rejecting the 9 back here on the 2nd. So for about 3 weeks. All right, big red candle here. Big sell. I am going to load some puts here, but I'm not getting in. I'm loading the 656s. That is a big red candle right there. I don't know if we can still have time to catch this down move. We'd have to be fast. I'm going to jump real fast. We'll see what we get. We may start bouncing here. That wouldn't be good. All right, I'm out. Looks like 8-9%. That was a super quick trade. But sometimes when you catch these big candles down, if you're fast enough, you can catch a piece of it. The other thing is they can sometimes be tricky, but when you see them show up at this kind of a move, sometimes you can catch them. So don't know if anybody caught that with me. It was pretty quick. Let's see how much I actually made on that one. Looks like about, 10%, 24 cents. So, and on a 250 put. So, all right, Craig got 10. Nicely done, Craig. You're getting fast. You are getting fast. Val got 12. All right, you guys, I'm impressed. And I know we have a delay here, so I'm impressed with you guys. This is why we have to be fast. We'll get these little reversals. When we see super, you can count on it. When you see a big move away from the moving average, in this case, let me put the 3 on here so you can see it. When you see it space out like that, you can count on it. We're gonna get some kind of a candle that pulls back up. It doesn't mean it changes direction, but you can count on the fact that we will pull back up at some level. So I do have the 3. I just can't see it because it's so far down. I'll show you what I mean here. We'll zoom in good. And we'll get back to our daily, our minute over here. Wix, Donna got 15. Nice job. You guys are I'm super impressed. You're so fast. And I know we have at least a 5-second delay on this stream. So great job, everybody who's able to follow that. Okay. Watch this 3, okay? Let me make this bigger. And we'll zoom out first and then we'll zoom in again. Right here, this is the 3 exponential moving average. Usually it stays right here with the price. It stays pretty close to the whole moving average. It doesn't stray too far. Doesn't stray too far from the 9. Here's the 9. But when you see it do this big space like happened on this candle, see the air? Look at all the air between the 3 and the 9 and the hull. When you see that kind of space, you can guarantee that there's going to be a reversal candle. I'm not saying we're going to reverse and head back up. I'm saying the moving average will always come back to where it needs to be. That's what we mean when we say mean reversion. Reversion to the mean is the idea that these moving averages are always going to come back into sync with each other. So that's just a little tip on these big heavy moves. You can trade the reversal, but that one is more dangerous because you don't know when the slide is going to stop and you got to be really fast to catch the reversal, but you will always see that happen. Let me see if I can find another example of it. Do we have one of those today? We got another one kind of right here, but this one is not as bad. You still see the air between the 3 and the 9. There's a good bit of air here, and then it reverses. But here, you see it kind of clearly here. On this drop, you see the 3 coming below the whole moving average. You start to get this air in between the 3 and the 9, and it's below the hull on this downward move. See how far it's spaced out? Again, you get that little reprieve. You get that little reversion to the mean. It always happens. You can count on it. Okay. So we are back to our shenanigans, aren't we? Quite this up and down movement. I want to look at the 5-minute because this pattern has played out for a while now. So let's take a look at the 5-minute here. You know what really stands out to me lately on these candles? The wicks. The wicks are really standing out to me. Good morning, Mark. Good to see you. Welcome. Mark runs a fantastic Discord and Facebook group. Mark, if you want to drop that your link on here, I would be happy for you to share that. Mark is a veteran trader and he does a great job, and I appreciate you joining me this morning. Okay, so what I see here is a lot of wicks, right? Up and down. So this is the 5-minute, and what I'm noticing about this recent pattern is this up and down. It's ranging on a larger scale than, we talk about the range during on the 1 minute chart during the day, and that's a real thing. But we're also getting range in the bigger picture, in the larger time frame. So if we watch this, we can see it's coming up. We're, like I said, we're kind of in a cup and handle pattern is what it looks like to me, but we're getting an awful lot of these wicks, these up and down. And that is also part of an elevated VIX. You do see that. It tells you that the market is getting jittery. When you've got these wicks, when you've got these up and down, these kind of barcode patterns, it's telling you the market's getting jittery. Now let's get back to our 1 minute because it looks like we're moving back up here. All right, our MACD just rolled over. We could consider calls here. I'm going to be looking at the 658s. Let's make that 657s. So the idea is I'm always looking at the first strike in the money, and I'm looking at today's expiration. This is the highest potential for profit. It is also the highest potential for loss. So that's why I'm very careful. Absolutely correct on those reversal charts. That's my bread and butter. Very nice, Mark. I love that. Well, I know you do very well. All right, we're back to the high of day from yesterday. That's this blue line right here. We have tested that a couple of times. We spent a good 30 minutes testing it over here on this first drop, recovered it, came back through it. Now we are right back to it again. And that is sitting at the 657 level on the SPY. Andrew, good morning. Did he put his link? Mark, if you feel so led, would you drop your Facebook or your Discord link? It's up to you, but I know people would love to learn from you as well. Okay. The 657 line is getting breached. I'm holding 657 calls. I'm not in them yet. We do have a turn on the MACD. Oh, thanks, Mark. We have a turn on the MACD here, but we are toggling on this line again, so I'm waiting just a second on calls. Let's watch this VIX. We've got the VIX moving down a bit with the last two candles starting to go green. So let's watch and see what we do here at this high of day. We have not yet recovered the VWAP, which is just overhead. Still showing the highest volume being traded at the 660 call level. That is the highest volume right now. Now remember, volume is dynamic. It changes constantly. So we can't necessarily trade just on volume, but it is another indicator. It's another way of watching where we're going, right? All right. So just slowing down here at this high of day. So I'm holding off on the call right now. And this is an example of the MACD being a little bit late. So we know that most indicators are lagging. The MACD is no exception, although it is one of my favorites. It is a lagging indicator. If the price moves too fast, like it did here, it takes the MACD just a bit too long to catch up. MACD did not roll over until this candle right here. Well, that move was already almost spent, right? So in certain cases, you're going to see that the MACD is not as accurate as you need it to be. So you have to look at other factors as well. You've got to look at your moving averages. All right, we're getting a bounce here. 16% on a call. Nicely done, Andrew. I'm going to jump on the call right here. I'm in. It's a bit of an extended move, so I'm probably not going to hold for very much. And I'm out here. That's 5%. In at 191, out at 201. So yeah, about 5%. Not too bad. All right, climbing up and just now tackling the VWAP. Okay, for some reason the link isn't highlighted. No worries, Mark. Thanks for trying. I appreciate you. Okay, so testing the VWAP. Now, remember, this is where we failed before. We came up. Remember, the VWAP is the volume weighted average price. That is another type of moving average. You can see I've got moving averages all over the board here, but the VWAP is for me the most important moving average because it takes volume and it weights the moving average with volume. Do you see how it does this little dip here? That's because this was a high volume drop. And so, yes, all the other moving averages dip as well, but the VWAP takes into consideration volume. And so a lot of institutions use the VWAP to trade off of. Some algorithms use the VWAP. So I do keep it on my chart because most of the time you'll see the VWAP acts like a magnet. You'll see price coming to it. Unless we're in a strong trend day, most of the time you will see price come back to the VWAP. And so this is what's happening right here. Last time we attacked the VWAP, we got just teeny little moves and then whoosh, a failure. And these days have been hard to trade. Okay, here's a push up. I like it. I'm not going to trade this move again because it is pretty extended. So it's a V shape right here. We can see that. We drop hard, we recover hard. That's a V shape. Those recoveries are usually pretty reliable when you see a V shape. So my guess is we're going to come up here and tackle this most recent swing high. But I'm not going to trade it because it is pretty extended. We've been pushing up for about 15 minutes-ish. So I'm not going to trade this move again. We already made a little money on it. I am going to watch and see what we do if we come up and try to test this recent swing high. All right, big market makers buy below the VWAP and sell above it. Right, Freaky, I agree with you. In fact, that's one of my rules or guidelines for newer traders. Just if you want to be on the safe side, if you don't want to get stuck in a market that's, just barreling against you, trade calls above the VWAP and puts below it. That's a really, it's a simple guideline, and it will keep you out of a lot of trouble if you're in a trending market. Do not sit in a trending market with a position that's going against you and just watch it just bleed out. You don't want to do that. The VWAP will tell you where we're going. It really will. If you pay attention to it, it'll tell you. So, yep, we've just pushed up through it. I think we could try to tackle this. Here's the main thing, and we've talked about this already. The main thing is we've got to come up and challenge, and the bulls need to recapture the 200-day moving average. That is the big deal. And if that doesn't happen today, we already looked at that candle, right? We saw the candle looking pretty unhealthy, right? Let's take another look at it. The daily candle is looking a bit unhealthy, but with this little push, it should be looking better. It is looking better. So again, this wick, we've wicked up through the 200. That's this turquoise line is the 200-day moving average. And this push right here is showing that we tackled it, we tried, and we failed. Now, the day is not over. We've got plenty of time left in the day. Could this be nothing more than a big shenanigan fest, up and down, and then a push up through the 200? I think it could be. However, we've got to be really cautious of the fact that if we lose this 200, we could really be moving down. Now, again, in the big picture, I think we are moving down, but this little temporary relief bounce, if we can get up over the 200, we can see another couple of days of upward movement. All right, coming back down through the VWAP on the minute chart. Let's take a look at that. Zoom in here a bit. All right, candles getting smaller. Does that mean change? It can mean change, Andrew. It can also mean, volume kind of slowing down, volatility slowing down. We're just sort of hanging out. It can mean range, or it can mean a change in direction. So good eye. All right. Freaky. Lower highs and lower lows today means guilty until proven innocent. Not a bad point there. Okay. Mark, I'm there between 6 a.m. and 12 p.m. Thank you, Mark. All right. David Neely, I can attest to bad things happening when you buck the trend. And you know what? It's not unusual for newer traders to try to trade reversals. And I myself do trade reversals. I do trade them. But newer traders tend to lean in that direction. You will make more money if you follow the trend. It's just the way it works. Now, can you make money on reversals? Yes. Can you make money on breakouts? Yes. But I would tend to say that you'll lose more money than you make if that is your only strategy to trade reversals. Trade with the trend. It's really going to make you more money in the long run, I promise. All right, Mark Sanwell, G-Man Trading Group. Thanks, Mark. Discord group. You're welcome. Thank you. It's a great group. A lot of really smart people in there, and I appreciate you putting it together, Mark. Okay. Coming down. Did not hold the VWAP. Second test of the VWAP today that's failed. We don't have the MACD rolling over yet. We do have the VIX popping a little bit up to 25.6. And we'll look at the VIX here in just a minute on the daily. Do we want to consider puts here? We are back to the high of day. This has been important. So remember, we stayed a good long amount of time here. Let's see. I am going to load the puts. I'm not getting in yet. I'm loading 657s. I'm not getting in yet. Oh, there's a break of the high of day. These slips are moving a little faster than these climbs, aren't they? I'm just watching this candle here. It's moved a little fast. Gavilan, are they trying to keep 6,600 on the SPX? They are trying to hold 6,600. That is what the deal was yesterday as well. They are trying to hold that. What they really, bulls, I mean to say, bulls need to hold 6,600, but way more than that, they need to go grab that 200 moving average. Okay. Sort of slowing down here on this drop, even though the MACD did turn just a hair. See that little bitty red there? Okay. We are right here in this congestion area that we were before. So I'm not going to jump on this put just yet. It's giving us a little slowdown here. All right. Back up to the high of day. We only broke it for just a second, came back up to it. I will pivot over to calls here if they start to push this back and the MACD starts to roll over to the upside. We've still got the leaderboard pretty strong. So we still have NVIDIA up 2.5%, Tesla up 2.1, Amazon up 1.9. The Mag 7 as a whole group is up 1.08%. And the Russell kind of leading this move up at 1%. Apple, Meta up just under 1%. Oh, okay. Another little drop here. I do still have my puts loaded. What's holding me back is this right in here. This congested area. Okay, so the Russell is leading. The Qs are at 0.6% elevated. The Dow is at 0.57. We're at 0.52. So again, we're leading, we're bringing up the rear in terms of the indices. All right, still moving down. All right, we are breaking that zone. I think I'm going to wait for a move to the upside. I don't think I'm going to play this put. All right, VIX giving us a little climb. We're up to 26.0. All right, Freaky got 6%. Nicely done. Excellent. Way to get in and out of there. Misclicked. That's okay. It happens. It's a lucky mistake, right? All right, holding right here at this bottom that we made before, which is sitting right at 656. There's a little bounce. I am going to pivot over to calls at the 656 level, but I'm not in anything. I'm anticipating this bouncing again. It could turn and come back down, but I'm anticipating it moving up here. Let's see what we get. It's not moving very quickly, not a lot of volume right now. You can see the volume kind of descending here. And actually, a lot of times if you see a move like this with descending volume, that can tell you it might not have been a real move. All right, no trade here at the moment. And while I'm watching this, what I'll do is I'll load up the VIX over here because I want to take a look at our daily chart on the VIX. Some technical analysts will tell you that you can't use technical analysis on the VIX. I would say it's hard, and you have to look at the VIX a little bit differently, but you can still use technical analysis, I think, on the VIX. But I will say it's harder. It doesn't. When you look at the chart, you'll see what I mean. It's a very different looking chart. All right. Looks like it's trying to pop here. Let's see. Yep, not doing much of anything. And that volume just really dropping off here. All right, so let's pull up the VIX on the daily. I'll watch. I'm going to keep my eye on this chart. If we get a push up through on the MACD, a roll up, I will consider a call here. Okay, so let's go to the daily on the VIX. And we'll zoom out a little bit. One of the main things that I've been following on the VIX for a long time, and you guys that have been following with me, you know that we have been talking about this rising bottom. Look at how long this bottom has been rising on the VIX. Pretty impressive. All right, Freaky, either big move incoming or East Coast took an early lunch. Or maybe both, Freaky. Could be. But yeah, this rising bottom is one of the longest we've seen. It's been happening since the end of the year, since December. It bottomed out here December 24th, and it has been slowly climbing. Look at this bottom. It just couldn't be any more clear. And so what does that tell us? Remember that the VIX is the volatility index. It is calculated by going out onto the SPX a month ahead and looking at options positioning. That's how the VIX decides if we are fearful or not. So the VIX is the volatility index, also known as the fear gauge. That's its nickname. When fear rises in the market, the VIX goes up and you will see the market come down. They have an inverse relationship. Every now and then, you'll see the VIX go the same direction as the market, and that's when you need to be paying close attention because it could spell trouble, could spell a reversal. But for the most part, the VIX is moving up, the market's moving down, the VIX is moving down, the market's moving up. They cross each other, they make an X, right? When we see this bottom rising like we have for virtually 4 months now, third month, January, February, we are back to that high of day, which I'm a little concerned with. I'm watching it. All right, so I'm still looking at the 656 calls. There we go. I'm going to go ahead and jump in here. I'm in on the 656 calls. The little blip here is this high of day that we need to push up through. That's this blue line right here. No, little red candle here. Let's pull up to that high a day and challenge that again. Strong red candle there. Increasing volume. If we beat this recent swing low, I'll jump out at a loss. Otherwise, I'm going to wait and see if we can push up again. right, popping back up. We need to tackle that high of day one more time. It's yesterday's high of day, by the way. Bulls want to stay over that at the very least. Jump back over to my futures screen. All right, come on. Let's push back up. And the trading has been so challenging over the last few days. Very, very hard to trade, very hard to scalp lately. All right, nice little push. All right, there we go. Very good, very good. I'm out here with a small win. That's probably 4%. Let's see what we got. It was like 5%. Little beat of the high of day here, but this is why, look at that. This is so challenging lately with the way that they are moving the price. So hopefully everyone was able to jump out with me on that one. All right, so we took a couple of nice little wins today. There we go. Here's a push through the high of day. Look for the next target to be this recent swing high up here at 658. The MACD is starting to roll. We could consider another call here. Let's see what we get at the high of day test. I'll zoom out so you can see it better. And what you notice about today is this inability to hold over the VWAP. That's significant. We pushed up this morning, but only for a few minutes and came down. We tackled it here for a few minutes and came down. We hit over here and came down. So until we can get over the VWAP and stay over the VWAP, this is not bullish. It's not. Even though we are elevated, we really need to get up over the VWAP and hold it. 6,600 on the SPX is pretty much where we've been trying to hold today. But again, on the short term, we got to beat the VWAP. On the longer term, bigger picture, we've got to get over the 200-day moving average. So those are the two goals that the bulls have today. And as long as we can't get up over this VWAP, we are more bearish than bullish. Now, of course, that can change. And you know, like I said, we've got volume sitting at the 660 strike. But remember, we've already been there, right? So we've already been to 660 first thing this morning. However, volume is still continuing to grow at that level. So right now, it's just the herky-jerky up and down. And we can trade that. We can trade this up and down range. You just have to be careful with your indicators. When we're like these big bars, you have to watch those. But in general, we can trade this up down range. It's big enough. All right. We are getting close to the end of the stream. So I was kind of giving you my trading plan, but let me break it down a little bit more for you. I am open to changing my direction all day today. So I have traded calls and puts, more on the put side, but I have traded calls as well. And what I'm going to be doing today, again, is watching where we are in relationship to the VWAP. I will be trading calls. If we recapture this VWAP and start to push up and they really want to grab 6,600 and then the 200-day moving average, if that starts happening, I will definitely be on that train buying calls. But if we cannot control and reclaim the VWAP today, any rejection of the VWAP is also another opportunity to buy some puts. Okay. That's where I'm at for today. I will be back again tomorrow at 11 Eastern. I want to thank you all so much for joining me. It's been a great day. We took a few nice little wins today. That was fun. And we'll be back again tomorrow for more market analysis and live trading, 11 a.m. Eastern. Oh, let's see. It looks like Roger has a comment. Andrew, wicks mean change or indecision. No wicks are strong directional candles. I'm sorry, did I miss a question from Andrew? I apologize. Let's see if I can find that here. Candles getting smaller, does that mean change? I think that's the question you're trying to answer there, Roger. And you're exactly right. When we do not have wicks on either end of the candle, those are stronger directional candles. But I also think Andrew might have been talking about the actual size of the candle. And wick or not, when you have tiny candles, that is either range bound or a coming change of direction, and usually both, right? When we get consolidation or range bound, it's building up pressure for its next move. So there you go. All right, guys. Well, thank you again so much. We'll be back again tomorrow. I appreciate you all, and have a great rest of your day. Bye for now.